Hello, 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 hello. Finally, it's working. Alright, since it's working, guys, so finally, let's see, get back to what we were doing. Sorry, bro. Yesterday, bro, the day before yesterday, bro, it was the hardest. Well, I made it the hardest, but still, bro, that shit hurt. Martin Luther King, security slogan. Your security exchange will be closed on Monday, January 16th, for Martin Luther King. Login. Bro, you know what? I also don't care. Wait, hold on. It says log in. Yeah, text message or security. No, I'm straight. Not right now. I actually hate all of you right now. I'm in a mood. I'm in a really bad mood. A hateful mood. It's not gonna change what we're gonna look up though. Not gonna lie. Not gonna lie. Anyways. Where did we even leave off last video? Let's see. Was it this?
To do is to wait for the market to come
Yeah.
towards your area of value, or in this case, resistance. So you can see the market head up into resistance, okay?
Alright.
Breaks into resistance at this point.
Alright. I'm not going to business school, but let's see. We'll go over our words in a second. Farming and what? How do I effectively start farming in Kia? You're almost done. Form your business with us. Learn 5 pros and cons, 5 different business types to find the goal. Find the one that's right for you. LLC. Yeah, it's crazy. Somebody got an LLC for me. Somebody's amazing. That somebody's amazing. From zero state filing fees. Okay. How it's unique. Better for max flexibility. How you manage and run your business. Board of directors not required. Unlimited owners, aka members allowed. You're not personally on the hook for business liabilities. Taxed once or twice. You're free to choose which can help minimize taxes. Ongoing filings and fees to stay in compliance. LLCs can't go public. Not recognized globally. You may ta- be taxed as corporation in other countries. Non-profit. So, alright, let's see what all of these are then. S corporations, better for smaller corporation. 100 shareholders max. Owners can only get common stock. Comes with voting rights. You're not personally on the hook for business liabilities. Tax once only. Shareholders pay on profits received. Ongoing filings and fees to stay in compliance. Less management. Flexibility must have. Must have a board of directors. More admin. strict rules about holding meetings and keeping records. All shareholders must be U.S. citizens or residents. The C corporation, best if you plan to go public one day, can issue shares to founders, employees, and investors. Limited owners, aka shareholders, allowed. Owners may get uh, preferred stock. This comes with no voting rights, but priority to, to dividends before common. I'm sorry, bro. I don't know. I'm be honest. So much common shareholders recognized internationally, preferred by investors. You're not personally on the hook for business liabilities. Tax twice. Business pays at the corporate level, and shareholders pay on income received. Ongoing uh, findings and feeds, filings and feeds. I don't know this word. I'm just be completely honest with you guys. I don't know or care. Um, fees to stay in compliance. Less management flexibility must have a board of directors. More administration. Strict rules about holding meetings and keeping records. How can I help you today? Nonprofit and then sole proportion. So nonprofit. I wonder if it, bro. I don't care. I'll be honest. I don't think that's gonna be very helpful. But I'm just in a bad mood. I should get out of a bad mood. How do I get out of a bad mood? Smoking. That works. I don't know my drug right now. You're almost done for me. Business life. Uh, no, I hate Google. Just because they put all these ads first. Starting a business is the most exciting and rewarding experience you can ever have. But where do you begin? There's many ways to approach to creating a business with many considerations to help guests work out of the process and improve your chances of success. Follow our guide to business, whatever. Consistency is key. Before you begin, get in the right mindset. The public often hears about overnight success because they make for a great headline. However, it's rarely that simple. They don't see the years of dreaming, building, and positioning before the big public launch. For this reason, remember to focus your business journey and don't measure your success against somebody else's. Consistency is key. New business owners tend to feed off their motivation and intelligence. And see, this is another one that I don't care either because I'm just frustrated right now. Hold on, be right back. We'll finish that when I get back.
point, and this candle over here, we have a valid entry trigger. This is what we actually call a bearish engulfing pattern. The story behind it is similar to a shooting star pattern, right, where the buyers were initially in control and then they quickly, right, got disrupted, and the market got pushed down lower by the seller, closing below resistance. Also, actually, you can see it's actually a false break as well. The market actually took out this highs and quickly reversed back into below resistance. This looks like number one, but anyway, yeah, so this is a valid entry trigger to go long, telling you that the sellers are in control. So what you can do is, again, to enter on the next candle open. So again, next candle open at this price point. Let's put this as green, right, to signify that is our entry point. Okay, I notice there's quite a few black lines over here. I'm going to remove some of them so you can see better. Okay, now what about our stop loss? So in this case, again, you can pull out the ATR indicator, the average true range indicator. I'll just do this one more time. So what we are trying to do over here is to set our stop loss a distance away from resistance, because we don't want to get stopped out prematurely. So what you'll do is, again, find out what is the high over here and add on, right, by this number of ATR value. In this case is about 45 pips. So let's do a quick calculation. The high of this candle currently, it shows that it's about let's see, 7885. Okay, so 7885 you plus 45 pips, right, that gives you 7930. So your stop loss will be placed at 0.7930. So I'll change this to red. Okay, and 0.7930. Got it. Okay, so that is your stop loss level, right? This over here is your stop loss. So basically, how you interpret the stop loss level is that from this high, you add on 1 ATR. Okay, you add on 1 ATR is equals to this level that you're seeing on the chart over here. Next thing, right, where is your target? So if you look at target, right, there are two levels that showing up over here. One is this recent swing low, and this one is more of an extreme, further away, right, that swing low. So in this case, usually I like to have a conservative target over here. So in this case, you can actually have your trade, right, all exit at this swing low. That's a perfectly, valid thought process. Okay, but at the same time, right, let me just remove the indicator. At the same time, right, some of you might be thinking, but Reina, if you look at this market, right, if you look back, this market is actually in a downtrend, Reina, and the price tends to break below this low, break below this low, break below this low. Because you look at this, the price over here, it breaks below this low, and then it makes a pullback. So won't we, like, be giving up some potential profits, because we can still look to capture this additional bit of the move, right, as the market breaks down lower, right? So that's a fair thought, right? So actually what you can do in this case is actually to have two targets. One is a more conservative target, and one is a further target. So let me share with you how to do this. So in this case, your first target can be over here. Okay, this is your first target. Let me just change this to blue. Let's call this target 1, right, TP1. Okay, and you can have a second further target, right? As you know, the market is in a downtrend. It could break below the lows and go a little bit further. So in this case, this is the extreme low over here. For all you know, this market could possibly, break below this extreme low, right, and then make a pullback. So you want to kind of like take your profits, right, somewhere about here, right, where you can get the most bang for your buck. So how do you do this, right? So how can you do this objectively? So what you can do is you can use a tool, right, called a Fibonacci extension, right, and look to exit, right, at just before the 127 extension. So I'll just get out, show you what I mean. Look at trend-based Fib extension. Click on this. You draw it from the swing high to the swing low and back up high again. So this is the swing high, down to this extreme low, and then up higher again. Okay, so once you do that, you can see that over here, can't see it over here, over here. I'll just manipulate this chart a little bit, okay? You can see over here, I want you to pay attention to this level over here. This is what we call the 127 extension. And over here is an objective way where you can look to set your second target. So I'll just draw a second blue line over here just before the 127 extension, maybe somewhere about here, okay? So let's see what happens next, right? So in this case, right, I'll just remove the Fib extension since it looks a bit messy, but at least you know how this second blue line come about. We actually use the Fibonacci extension to kind of like project, right, where the price could go, right? So we can just take advantage of that extra little pips, right, as the market break down lower. So what I mean by this is that, example, this is the swing low. Market break this swing low by quite a little bit before it makes a pullback. So the question is, where exactly, right, do you take profits, right, as the market breaks down lower? So this Fibonacci extension gives you that a little bit of objectivity to it. Okay, so I'm just going to remove this Fib extension first and see what happens. So in this case, the market, you can see that it pretty much went lower over here and hit our first target relatively quickly. So at this point, market continued down lower over here, almost reaching our target here, and didn't quite, and now it's making a pullback. And as you can see, this is how the market is right now. So at this point in time, right, so what you can do is actually, your stops is already in place, your first target is already taken, and your stop loss is already at a logical level. It's still over here. So what you can do is, again, leave your stop loss as it is, right? And let the market either, hit your this second target or hit your stop loss, right? Because there's really no point, trying to shift your stop loss, right, to break even. Because again, there's a good chance you could get your stop loss hit at break even. So what many traders like to do in this case is that they set their stop loss to, let's say, break even. They bring their stop loss down to their entry point. But to me, that's not really very logical, because there is no like kind of like barrier, right? Because this is an area of resistance. If the market comes up higher and then heads down lower, you can see that in this case, right, you will get stopped out on your trade, right, on the second half of the position, and the market eventually hits your target and you're not in it because you give in to your fear. So usually what I do is that my stop loss is already at a logical level. I'll leave it as it is. My target is at this point over here. I know I almost got filled on the trade, but I didn't quite, so I'm just going to leave my plan as it is. Either it's going to hit my stop loss or hit my target. I already taken partial profits on this first target over here, so even if the second position hit my stop loss, hey, guess what, this overall trade will not really be a loser. It's probably could be more of a break-even trade or a very, very tiny loss. So at least that's my thought process to how I would go about handling this trade. Alrighty, so in this example, right, I want to share with you an example about the range market. So if you look at this one, at this point in time, this chart, the market might seem to be in a range. And earlier, if you recall, at the earlier part of this training, I mentioned that when the market is in a range, I still tend to have a directional bias. Sometimes I want to be buying only at support, or sometimes only to sell at resistance. So now the question is, how do I decide when the market is in a range? Do we buy at support or sell at resistance? That's what we're going to cover right now. So if you look at this market at this point in time, right, what I want you to do is actually to go up to a higher time frame and see what the market is doing. So if this is the 8-hour time frame, I'm going up to the daily time frame. And as you can see over here, the daily time frame, this market is actually in a long-term uptrend. This means, right, on the lower time frame, if the market is in a range, as much as possible, I want to be a buyer. I want to buy at support because I know that the market is in a long-term uptrend. And because you're buying at support and the market is in a long-term uptrend, the chance of the market breaking out of resistance is higher. Okay, so let's get back to the charts, right? So this is the 8-hour time frame chart that I was sharing earlier. So again, the same thing applies, right? So market is in a range. We look to identify the area of support that we want to trade from. That's the area of value. So I'm just going to draw this horizontal line somewhere about here. Change this to blue to signify support, shall we? Next thing is to wait for the price to come into support. So let's see. So in this case, the market has come into support. Great. Next candle over here. Right, he has break below support. At this point in time, many traders will think, oh man, support is going to break down, right? Let's short this market. Okay, then what we see next happen is that the market then show signs of reversal, and this is what we call actually a false break. It's a valid false break as the price took out below these lows and then quickly reverse and close back above support. At the same time, right, traders who are familiar with candlestick patterns, they might call this a bullish engulfing pattern. That's fair enough as well, because as you can see, the candle has actually engulfed, right, the prior candle. So this is the prior candle. This green candle has actually covered the body of this prior candle over here, the red one. So this is what we call a bullish engulfing pattern. So of course, needless to say, what we can do is actually go long on the next candle open. So let's see what happens next candle. You can see that this is the opening price. Let's set this as our entry, right? So let's change this to green. This is our entry. Stop loss, I'm not going to do the 1 ATR calculation because you should be familiar by now, but your stop loss, I would say somewhere about here. Okay, let's change this to red. There you have it. Okay, this black line, I'm just going to remove it since you know this is an area of support. I remove it. So what about target? So you know that the higher time frame, the market is in an uptrend. So how can you, take advantage of it? So again, you can use similar principles that you've learned earlier. For example, if you want to exit your trade before opposing pressure steps in. So I would say this is a good level to reference to, right? Because this is where sellers could come in, right? So over here, let's put this as our target just before this area of resistance over here. Okay, so just before this area of resistance, we look to take some profits off the table. And as you've seen, right, earlier you've learned a technique where we use a Fibonacci extension, right, to kind of like project where the move might end. Okay, so of course you can use Fibonacci projection for your second target. But another technique I want to share with you is what we call trailing your stop loss. This is up high again. This is a swing high, down to this extreme low, and then up higher again. Okay, so once you do that, as possible, I want to be a buyer. I want to buy at support because I know that the market is in a long-term uptrend. And because you're buying at support and the market is in a long-term uptrend, the chance of the market breaking out of resistance is higher. Okay, so let's get back to the charts, right? So this is the 8-hour time frame chart that I was sharing earlier. So again, the same thing applies, right? So market is in a range. We look to identify the area of support that we want to trade from. That's the area of value. So I'm just going to draw this horizontal line somewhere about here. Change this to blue to signify support, shall we? Next thing is to wait for the price to come into support. So let's see. So in this case, the market has come into support. Great. Next candle over here, right? It has break below support. At this point in time, many traders will think, oh man, Rainer, support is going to break down, right? Let's short this market. Okay. Then what we see next happen is that the market then show signs of reversal, and this is what we call actually a false break. It's a valid false break as the price took out below these lows and then quickly reverse and close back above support. At the same time, right, traders who are familiar with candlestick patterns, they might call this a bullish engulfing pattern. That's fair enough as well, because as you can see, the candle has actually engulfed, right, the prior candle. So this is the prior candle. This green candle has actually covered the body of this prior candle over here, the red one. So this is what we call a bullish engulfing pattern. So of course, needless to say, what we can do is actually go long on the next candle open. So let's see what happens next candle. You can see that this is the opening price. Let's set this as our entry, right? So let's change this to green. This is our entry. Stop loss, I'm not going to do the 1 ATR calculation because you should be familiar by now, but your stop loss, I would say somewhere about here. Okay, let's change this to red. There you have it. Okay, this black line, I'm just going to remove it. Since you know this is an area of support, I remove it. So what about target? So you know that the higher time frame, the market is in an uptrend. So how can you, take advantage of it? So again, you can use similar principles that you've learned earlier. For example, if you want to exit your trade before opposing pressure steps in. So I would say this is a good level to reference to, right? Because this is where sellers could come in, right? So over here, let's put this as our target just before this area of resistance over here. Okay, so just before this area of resistance, we look to take some profits off the table. And as you've seen, right, earlier you've learned a technique where we use a Fibonacci extension, right, to kind of like project where the move might end. Okay, so of course you can use Fibonacci projection for your second target, but another technique I want to share with you is what we call trailing your stop loss. This is very useful because as you've seen, right, on the daily time frame, this market is in an uptrend. So imagine this. Imagine that the market breaks out of this highs. It breaks out of this highs and then continues up higher. You can imagine that there's a lot of profit potential towards the upside. So how can we capture this trend? So what you can do is to use a trailing stop loss. So there are many ways to trail your stop loss. Okay, let's go back to the 8-hour time frame again. There are many ways to trail your stop loss, but one approach you can use is moving average. But for now, let's see what happens in this on this time frame. So you can see that market starts to show signs of headache, about to hit higher. All right, so this one you can see market quickly hit our first target over here. Okay, at this point in time, right, your first target is met, right? And let's say you have you sell half your position, right, at this first target. So you have the remaining half of your position still on. So how can you manage the trade on the remaining half of your position? So let's say, for example, right, let's just, for simplicity's sake, let's say you buy 10,000 units of dollar against the Chinese yuan. You sell over here 5,000 units, right? So at 5,000 units at this highs over here. So you take profits. So what's left over here now is you have the remaining 5,000 units on this currency pair, dollar against the Chinese yuan. How can you manage this trade on the remaining 5,000 units that you are long? So what you can do is to trail your stop loss. You can use something like the 50 period moving average. So for example, you just go to moving average. Okay, this one comes up. Typically, if you want to trail your stop loss, I recommend, I won't say recommend, but if you want to ride medium-term trend, right, you can use a 50 period moving average. Click OK. Okay, so what you can see over here on this chart is this blue line over here. This is the 50 period moving average that I've inserted on the chart. So the way to trail a stop loss is that you will hold the remaining position that you have until the market breaks and close, right? Breaks and close below this 50 period moving average, below this blue line. And of course, if the market continues up higher, that 50 period moving average will continue up higher along with it. So let's see what happens. So in this case, right, you can see the market breaks out higher. I'm just going to play this a little faster. Right, you can see that as the market goes up higher, your trailing stop loss, your 50 period moving average, is going up higher as well. So in other words, you're kind of like locking in your profits as the market progressively move in your favor. And you will exit the trade only when the market breaks and close below the 50 period moving average. So in this case, you can see the market continues up higher. Okay, almost right, breaking and closing below the 50 period moving average, but it didn't. So we continue to hold, right, the remaining 5,000 units that we have on dollar against the Chinese yuan until the price breaks and closes below it. So it's still grinding up higher, as you can see. Okay, and then over here, finally, it has now finally break and close below the 50 period moving average. And this is where we exit the final portion, or the second half of our portion, right, of our trade. Okay, so you can see that this, if you write this trend up higher, you can see that this profit potential on this trade is going to be pretty attractive. This was your initial risk at the start, right? You can see this was your initial risk, and then look how much higher the market pretty much exploded to this point over here. So I would say in terms of risk
I
to
really
reward. I
don't
think
like almond
possibly
milk.
risking $1, to make maybe
Never.
$4 or $5 or so. Okay, so
I need
that's
water.
pretty much it for this example, and let's move on to the next one. Okay, so moving on, right? If you're enjoying this training so far, smash the thumbs up button. If not,
Hell
hit
yeah.
subscribe.
I'm
So
about to smash that.
moving on, right? Let's do a super quick recap about the May formula. So again, May stands for market structure. A is area of value. E is for your entry trigger, and the other E is for your exits. Exits where you're right, and exits where you're wrong. So if you look at this chart over here, this is the chart of gold, the daily time frame. What is the market structure? Market structure is in an uptrend. So we are looking for buying opportunities. Where is the area of value? So from what I'm seeing over here, I would say this is a possible area of value. So this area of value, I would say, is a little bit tricky in the sense that I see one over here, and I possibly would see. Let me just change this to black first. Okay, and I possibly see slightly lower another one over here. So you can see that this area of value is pretty wide, right? You have no idea whether it's going to retest this level or this level. And if you draw this like an area, it's going to be a pretty wide area. How do you kind of like, set your stop loss when the area is so wide? How do you know when to enter? So what I like to do in this case is to let the market give me clues, right, to where it's about to show signs of reversal. So what I like to do is to let the market usually come down first, make a first test and bounce, and then come down again, made the second test, giving me like a false break, and then bounce up higher. So at this point in time, I roughly know that, okay, buyers are coming in around this area. I will reference this level, right, to kind of like set a proper stop loss. Okay, so let's see what happens next. So I'll just let the market continue, right, heading down lower. At this point, we have like a hammer. Okay, so at this point, I wouldn't want to buy over here because again, the market could at this point go up, right, and come down and continue the downtrend. That could happen. So I would want to see the market make another step lower and fail to go down lower, right? And that at that point in time, that's where I would want to time my entry to go long. Okay, so but what we have over here is that the market has come into our area of value. Let's see what happens. Market heads up higher. Now consolidating a little bit, and then heading up higher. Nice. Now it got rejected a second time. So again, pay attention to this one over here. The market head up higher, swing down lower, taking out this lows. And then on this most recent candle, notice the price rejection. The market tried to break down lower, couldn't, and close almost near the highs of the days over here. So at this point, when I see this, right, I want to go long because the market has tell me that it tried to push the price down lower 2 times and failed. So that to me is a signal that, okay, buyers are possibly coming in from this area of value and could push the price up higher. So what I'll do is, again, I'll look to enter on the next candle open. So let's see the next candle open over here. I'll look to go long. Okay, I'll just put this in green, signaling my entry price. I'll remove the 2 black lines since this is the area of value. I'll set my stop loss at 1 ATR from this most recent extreme low, which is this one here. So probably my stop loss is somewhere here. Okay, just change this to red. Okay. As for target, I will set it just before this most recent extreme high over here. Okay, pretty decent risk to reward. So set it over here. Okay, somewhere about here. I'll change this to blue. Okay. Some of you might be thinking, but Rainer, why not this level over here? I would say this one here is fine. It's okay to be honest, right? Because although your risk to reward is slightly less than 1, probably 1 to 0.8, I think that's a decent level to actually set it as well. So let's set our first target just before this extreme swing, not extreme, but this most recent swing high, okay? And a second one further away over here. So 1, and then the second one over here. Okay, let's see what happens next. So in this case, the market pretty much reach our first target relatively quickly, but this is not a big winner because you're probably like risking $1 over here, right? As you can see, this is your risk. This is your risk. Okay, and this is your reward, right, to the first target. So I think you're probably risking like maybe $1 to make 70 cents, 60 cents or so, right? But because you have a second target, overall this trade could still be a profitable trade, right, if it reaches your second target. So first target is met. Let's see what happens next. So in this case, the market now showing signs of reversal, going back to your entry, putting you in the red right now. So again, remember, many traders, they'll panic. Rainer, let me cut my loss. Let's move on, right? No, remember, your stop loss is already at a place, right, where it's logical. It's away from the noise of the market. It's away from support, right? Now support is not even broken. Support is now still intact. You don't want to be cutting your loss, right, into supports, right? So your stop loss is there for a reason. Adhere to your stop loss. Let the market do what it needs to do. And in this case, you can see over here, market starts to again go up and up and down, right, messing with your emotions and feelings, and then finally you got stopped out on this trade over here. So this trade overall, I would say it will be a loser because your first target probably is not enough, right? Your first target here is probably not enough to cover the loss on this second half of your position, and it's perfectly fine. Where I'm going over here is to kind of like let you know that when you trade as a trader, you will have winners, you will have losers along the way. I want to be honest about this upfront. The May formula is not the holy grail. Okay, so manage your expectations. Hopefully, by sharing losers with you, right, you would actually go out there to trade the markets, hopefully on the demo or a really small account, and to manage your expectations to know that there will be losers, plenty of losers, right, that will come your way. Okay, just one last final example before we conclude today's trading, right? So this last example, I want to share with you a concept, what I call stacked areas, right? This is pretty much where multiple areas of value come together, right, to kind of like increase, right, the odds of the price reversing at that area. So I want to share with you this concept.
That's good. I want to save that. So again, what I like to do is I like for especially things that I'm learning. I like because I don't know. It's not that I'm not fast. Like I'm really fast with learning it. Learning is not the issue. They're keeping it there. It's the freaking issue. So I should just I'll stop the charging. I'm trying working on the balance. All right, guys. So I had way too much sugar today, right? So what I'm gonna do is I'm gonna play this and I'm gonna go ahead and get some water. I'll be right back.
Business owners are turning to funnels to grow their businesses at rates that no traditional website ever could. Today,
Welcome to the first part of the Ultimate HTML and CSS series. In this series, I'm going to take you on a journey and teach you all the skills you need to build fast and beautiful websites that look great on all kinds of devices. I'm assuming you know nothing about HTML or CSS and want to learn everything from scratch. So in the first part of this series, we're going to talk about the fundamentals of web development with HTML and CSS. In the second part, we'll explore the advanced concepts. And in the third part, we'll put everything together and build a beautiful, responsive, and blazingly fast website for an imaginary cloud hosting company called Moshify. If you want to play with this website, just head over to moshify.com and see it for yourself. This is what you're going to build in this series. I'm Mosh Hamadani, and I've taught millions of people how to code or how to become professional software engineers through my coding school and YouTube channel. If you're new here, be sure to subscribe as we upload new videos all the time. Now let's jump in and get started. All right, let's talk about the tools you need to take this course. For the starter, you need a code editor. There's so many code editors out there, like Visual Studio Code or VS Code, Sublime Text, Atom, and so on. In this course, I'm going to use VS Code. With this request, the browser wanted to get page of this website. This is kind of similar to how you resources can be web pages, also called HTML documents. They can be images, video files, fonts, and so on. So we type the URL of a website and hit enter. What happens now? Well, there are two pieces involved here. The browser, also called the client, and the computer or computers that host our target website. We refer to these as web servers or servers for short. This is what we call the client-server model. The client requests a service, the server provides that service. So our browser sends a message to the server and says, hey, give me the homepage of this website. This is kind of similar to how you send your friend a text message. You can think of your phone as the client sending the message and your friend's phone as the server receiving the message. Now, back to our example. This message is formatted based on a protocol called HTTP or Hypertext Transfer Protocol. You've probably noticed it before but never knew what it is. In simple terms, HTTP is a language that clients and servers use to talk to each other. It's not a programming language, it's just a plain textual language for communicating over the internet. We also have HTTPS, which is HTTP with encryption. So the messages exchanged between the client and the server are encrypted. Here's a simplified example of an HTTP message. With this message, the browser tells the server what it's looking for. So on the first line, it says that it wants to get a page or a file called index.html using HTTP version 1.1. Index.html often represents the homepage of websites. On the second line, we can see the host, that is codewithmosh.com. And on the third line, we can see the language that the client can accept, in this case, English. Now, don't worry about memorizing any of this. All I want you to understand here is that this message is structured based on the HTTP protocol that client.
Okay, first, when they say things like that and they literally have it memorized, bro, memorize it. I'm just saying that right now. That's why I keep going back and to the beginning because I've created a website. Well, I created a website with like a little game on it for school, so I could get suspended. But I didn't get suspended. They actually praised me for it. I was like, what the fuck? But anyways, they you you gotta like you gotta learn those codes like that English thing right here. Here, can't see my finger pointing at it, so that's a code for English. This goes on index.html. It's probably gonna be the name of that file as well before you rename it, and it's in every website. The host, you need a host, and yeah, so definitely
Clients
remember
and
that code.
servers understand. So the server receives this message, it figures out what the client is asking, and then it will send a message back to the client. The first message is called an HTTP request, and the second message is called an HTTP response. Every data exchange using the HTTP protocol involves two messages, a request and a response. Now, what is in the response? Here's a simplified example. On the first line, we see the version of HTTP protocol used, followed by a number which is the status code. 200 means successful or okay. Right below that, we can see the date and time of the response. Next, we can see the type of content the server is sending back to the client, in this case, text/HTML. And after that, we can see the HTML code or the HTML document that represents the homepage of codewithmosh.com. Of course, the actual
Okay,
HTML code is way long.
before I forget, sorry, I'm just looking at it because I already know this part meant. But before I forget, I want to try something really quickly. This is just for my friend's sake. Let's see how this works. Let's see how my comes next to these beats. Real quick on my own stream. Here we go. Wanna hear my Like it's in the background, but you can hear my voice very clear. That's pretty cool how it like separates and like you can hear the separation, but like it goes.
Longer.
That's crazy.
Now, as the browser reads this HTML document, it constructs what we call a DOM or a document object model. Don't let this fancy name scare you. This is a model that represents the objects or elements in our HTML document. What are these elements? All the building blocks of our page, like paragraphs of text, images, links, and other stuff. You will see this in action in the next lesson. Now, as the browser is reading this HTML document that is returned from the server, it discovers references to other resources in this document, like images, fonts, and other stuff. Each of these resources has an address or a URL. So for each resource, the browser sends a separate HTTP request to the server to fetch that resource. Many of these HTTP requests are sent in parallel, so we can see the page as quickly as possible. Once the browser has all the necessary resources, it will render the HTML document. Rendering an HTML document means displaying it. It's a fancy technical term we use often. So, in a nutshell, our browser sends an HTTP request to the server and receives an HTTP response. This HTTP response contains an HTML document. The browser reads that HTML document to construct a document object model and render the page. In the next lesson, I'm going to show you all of these steps in action. All right, let's see HTTP requests and responses in action. So open up Chrome and head over to google.com. Now we need to access Chrome DevTools. This is a very powerful tool used by front-end developers. So on the top, we go to View, Developer, Developer Tools. Now look at the shortcut. On Mac, it's Alt or Option, Command, and I. On Windows, it's obviously different, but remember the shortcut because it's much faster to access the DevTools via the keyboard. So here's the DevTools. The first time you see it, it might appear a bit intimidating, but trust me, it's much easier than you think. Throughout the course, you're going to learn more about the DevTools. So here we have a few different tabs: Elements, Console, Sources, Network, and so on. In this demo, we're going to go to the Network tab so we can inspect the network traffic to and from google.com. Now, by default, DevTools is docked to the bottom of the screen. We can dock it to the left, to the right, or undock it as a separate window. So over here, we can dock it to the left side.
Bro, you know I used to do this at school. I used to go, and matter of fact, I did this for my grades sometimes. What's this? What's this? I forgot what website I used for it, but I used to do this and just show this to my parents. Yeah. Be like, yeah, mom, look, I did it. So I would look at what's getting highlighted. Then I would go down on that bar. That's getting highlighted. Go down on that bar. This one I would go down. Obviously go down. Go down. That. You have to. You gotta just keep going, man. Till it shows you exactly what you're looking for. Alright, and it's telling you which classes on that source page. Cause it's a really big page. That's why it's has so much on it. Boom, and then you go down one more time. That's getting highlighted. That's not. It's this one. Alright. That one. And then I would just do this. Alright. Now, this should be it right here. And then just go down. You go down on that. Down on this. Where it says A plus. The text. God damn. And that's why coding's so long, because there's so many bars for so like the littlest things, bro. I see. I have a freaking F on the final. Let's enter that. Hey, Mom, I got an F on my grade. I said, bro, I put A's on that bitch, nigga. Bro, I would like, I would look up ways. I'd be like, how to change your grades, bro. That shit, this shit does pop up, but I knew about this shit before that because what me and my friends were doing when we were in class, we would go to, let's say, to see, articles. Articles, CNN. Let's say this is a classwork assignment. Mega Millions draw numbers, 1.35 billion jackpot and second largest in history on Friday. Alright, so this is what we do, right? You just highlight, right click, inspect that specific element. It's gonna pull it up. What did I highlight again? Where is it at? Oh, lucky day. There we go. So here it is. It's gonna pull it up. It's dark for you. It says a lucky day. Then it will be like this, like this. Hold on. And you just put that in, bruh. And then call your teacher over. Hey, Miss such and such, come here. It says it says, yeah, bro. All it says is, yeah, bro. Bitches be bonkers. Second largest in the lottery's history. I don't even know what that means. And then they would like they would be like, or you could go to your teacher because the teacher doesn't know at this point, and now she's confused. She's like, what the hell? And then now you'd be like, yeah, no, I actually hacked their website. Because then you know, like, she doesn't know what's going on. So you'd be like, yeah, I hacked their website, and yeah, I changed what it said. And then they'll try and call the cops. Like, bro, I swear that's happened to me. They didn't try and call the cops, but no, I got written up a few times. But yeah, it's crazy that some adults like they really don't even know that. It's a simple tool like that children play with. I used to play with in middle school. Um, but that's really all that he's talking about. He said this is for the page source of that website, and you could and inspect it and stuff, and you can do control alt U, I think, as well for the page source. U or control U. There you go. Control U. You don't need control alt all. You could just see the whole page source for this. Apparently, I think. So we got. Let's click on something like right here. This host. That's the code for that. Return French. You know, there was one day on school where I decided that I wanted to low key read this whole thing. Yeah, like I decided I wanted to read this. I don't even type that much. How long it would take to make a. It's crazy. It's just amazing. It's crazy to me. But yeah, that's really all he's talking about for right now. This is a lot more technical. I don't even know how to do this, to be honest. Fuck.
Front-end developers like this layout. So they put DevTools on the left side and they have their website on the right side. Now in this demo, I'm gonna undock it as a separate window so we have more space to work with. So let's undock it. Good. Now we need to refresh our website. As you can see over here, on Mac we can press Command and R. On Windows it's probably Control and R. Alternatively, we can go back to this window and press the refresh button. Now, back to the DevTools, look at all these items over here. These are the HTTP requests that are sent from our browser to google.com. As you can see, there are totally 45 requests, and here's the amount of data transferred over the network. So in this case, just over 94 kilobytes. Now look at the first item in this list. This is the first HTTP request that Chrome sent to google.com. As you can see, with this request, the browser wanted to get a document, and the status of this request is 200, which means okay. Over here, you can see the amount of data transferred over the network for this request and the time it took to get the response. Now, if we click on this request, we can see more details about it. So here on the headers tab, we can see all the headers of our request and response. So here are some general headers like request URL, request method, which is get, status code, that is 200, we talked about it, remote address, this is the numeric representation of google.com. Now down below, we have response headers. There's so many headers here, you don't have to worry about them. But as an example, look at content type. We talked about this in the previous lesson. So the type of this response is text/HTML. Below that, we have the date and time of the response. Now, if we click on the preview tab, we can see a preview of the HTML document that is returned from the server. So this is the home page of Google. Now, in this HTML document, we have references to other resources like images, fonts, and so on. So all these subsequent requests are sent to download those resources. So right below the first request, we have a request for downloading a PNG or an image file. Here's another request for getting another image. We have two requests for getting two different fonts and so on. Now we can easily filter this list. So let's click on the filter icon here. By default, we see all requests, but we can filter by request type. For example, we can select doc to see requests for downloading HTML documents, or font to see the requests that were sent to download fonts and so on. Next, I'm going to show you how to create your first HTML document.
And I bumped into one of my brother's friend's mom, and she was just so thrilled that he had graduated.
Oh, coding bootcamp. I mean, that would be cool, but I don't think I would require it. I'm 18. Got like 2 more years before I give up. Alright, well that's it for today. We're going to definitely do some more of what we did today